Right now, global liquidity is not expanding, meaning banks lend less often, there's less money frothing around in the system, or at least the pace of new money frothing around in the system isn't very high. So even though we have one entity scooping up a huge amount of Bitcoin, on net, the market isn't nearly as bullish as Michael Saylor. You could say this is the Wall Street cycle, but ultimately, I think that this is the cycle where Wall Street dips their toe in the water. Stretch is sort of the first instance where any company is attempting to transmute Bitcoin's high growth properties into a fixed income instrument that appeals to a much wider base of people. Clearly, there is demand for this. The next 4 years, the next 6 years into not just the 2028 halving, but the 2032 halving are going to be where things really kick off in earnest. Imagine having an STRC at Chase Bank, at Citizens Bank, at Bank of America. What happens when you have hundreds of those instruments available at most bank accounts across the country? Most people are going to be holding Bitcoin in the United States. They're just not going to have any idea.
Before we get into today's episode, I want to talk about something that comes up in almost every conversation I have with Treasury executives. They get the Bitcoin thesis, they see the macro case, but then they walk into a board meeting and the first question is, who's holding it? Are they regulated? Are they insured? Can we audit this? That's where BitGo comes in. BitGo is an OCC-regulated national trust bank. That means they operate under the same federal oversight as the institutions your board already trusts. Your assets are held in segregated trust accounts, never commingled. They're secured in 100% cold storage with multi-signature architecture. If you're building a case for Bitcoin on your balance sheet, BitGo is the custody partner that turns a board conversation from why into when. Visit bitgo.com/Bitcoin-Treasury to connect with their team. Hey everybody, Tyler Rowe here, and welcome to the BitcoinTreasuries.net podcast. Today I'm joined by Joe Consorti. Joe is the head of growth at Horizon at joinhorizon.com, which is a platform converting home equity into Bitcoin with no new monthly payments and no term limits. Joe was previously a market analyst at the Bitcoin Layer. He's also worked on Theia, which is a Y Combinator-backed Bitcoin custody startup. He's the author of The Great Repricing, a research report quantifying trillions in monetary premium embedded in global real estate, and argues that Bitcoin will drain it. Joe, welcome to the show.
What an intro, Tyler. Thanks so much for having me. I'm really excited for it. Thank you.
Yeah, you got it, man. So I want to dig into your past and kind of your Bitcoin story, but I think first we should lead off with the real, what I think is the real big story in Bitcoin right now, the dominant narrative, and being at BitcoinTreasuries.net, I think we're all talking about it. STRC, so strategies, digital credit offering, their preferred equity that has the monthly dividend, and it looks like soon that'll be changing. Saylor and Fong both tease that they're going to be moving to semi-monthly payments if that gets approved by shareholders. But, Stretch had a banner week, and then it had a banner 2 days after that, last Monday and Tuesday, where they raised over $2 billion to buy more Bitcoin that they announced today, Joe, as we record on Monday, April 20th. What's your take on what Saylor and Fong and the team at Strategy have been able to do with Stretch?
Whew, man. Well, it's pretty remarkable. This is sort of a once in a generation type instrument. If you take a look at the amount of Bitcoin that they acquired with this purchase, it's their third largest Bitcoin purchase ever. So they bought 34,164 BTC today. About 15,000, 14,000 Bitcoin get produced every single month. So they bought 2.5 months worth of Bitcoin using just in 1 week, using proceeds from one instrument. So it's quite amazing. And whereas previously it was really difficult to raise capital during bear markets in order to purchase Bitcoin, for Strategy, they've successfully figured out a way where they can raise capital through STRC during Bitcoin bear markets in order to purchase Bitcoin. So now it's not necessarily their Bitcoin purchases aren't really dependent on whether or not it's a bear or bull market. They can really buy regardless of that. And so it's quite an amazing time to be alive. Also it's sort of making the mainstream financial news, at the very least from a YouTube perspective. Coffeezilla put out a very popular video on his second channel last week breaking down STRC. He's not a fan of it. He said that it has Ponzi-like attributes. He didn't call it a Ponzi scheme. He's always very careful to hedge his language. But regardless, he sort of implied that that it shares some characteristics with a Ponzi scheme, and so it's not necessarily the type of coverage you want, but any coverage is good coverage, and it's just an amazing thing to see. They now hold over 815,000 BTC, well on their way to a million. Estimates show that they could hit a million around late August. So, I mean, it remains to be seen, right? This is just an absolutely incredible company, an incredible instrument. And it's wild to be able to see this, see them purchase Bitcoin basically every single week at this point in increasing amounts.
Yeah, it's kind of crazy. Lots to unpack there, Joe. With Coffeezilla making his video, there's still a lot of bears out there spreading FUD or not doing huge due diligence into what strategy is doing. Why do you think there is so much hate or vitriol kind of spewed at strategy and what they're doing? Is it Bitcoin? That they that they have a problem with at the end of the day, or are they just looking for clicks?
I don't think it's either of those things. I think it's that Coffeezilla in particular is somebody who has been a huge asset to the Bitcoin community in that he has found and investigated and called out crypto scams for a very long time, right? There's only one actual asset in this space that is truly has no governance whatsoever, and that's Bitcoin. Its protocol is immutable, its monetary policy cannot be changed. And so, in a very real sense, it is a digital store of value, but everything else is not. It's worthless largely. And it's created by people who are trying to scam you. So, Coffeezilla over the years has done a great job at pointing out all of those scams and exposing them and helping people. Not lose millions of dollars potentially. He has helped millions of people. And so it's not really that he's against Bitcoin or anything like that. It's just that because he has covered these scams so long and for so often, when you hear the words Bitcoin and yield in the same sentence, the sort of that internal pattern matching goes off. That pattern matching brain goes off, and you immediately think of Terra Luna or FTX or Celsius or BlockFi or whatever, or any one of these other black box schemes where you could put your money in or put your Bitcoin in, and then suddenly you were earning 25% on it a month, but you didn't know how it really worked. And so typically, like that is what he has been covering. So it's very natural when you see there's an instrument offering 11.5% yield to say, oh, this is just another one of those schemes, even though it's completely different in that this is a fully licensed and regulated NASDAQ listed security with 50 years worth of dividend coverage on the balance sheet that backs it up, right? It's effectively trying to transmute Bitcoin's high growth properties into a fixed income asset. So it's an entirely different ballgame here. That's not to say there aren't risks. Of course there are risks, right? If Bitcoin has a decade worth of negative returns, then obviously keeping up with that 11% dividend is not going to be ideal. So there are some risks associated with this product, as there are with anything. But his view of this being Ponzi-like, in my view, is completely overblown, right? And I did a video on this. I walked through all of the math. I spent half an hour doing it. So ultimately, that's sort of where we stand. The reaction is understandable, but it's sort of totally misguided, right? It's like when your immune system attacks something that isn't actually a virus or anything like that, or isn't a sickness. He's on the right track with continuing to call out crypto scams, but this is just completely different, and the math backs that up.
If you're trying to get to the top of BitcoinTreasuries.net, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide. Why? It offers regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the New York Stock Exchange and hold a federally chartered national bank license from the OCC. For treasury companies, it's a must call. This is the infrastructure layer that really matters. Learn more at bitgo.com. It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wished for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
Yeah, it is. There's numerous times, especially when Michael Saylor first came onto the scene, where I probably disagreed with him. I'm sure those moments still exist, but he said some provocative things, and he's made me change my perspective, because I think you're right. Like, anytime that you talk about yield in the Bitcoin space, we automatically just think of like various things that have blown up in cycles past, and it's like, do you care about the actual value prop of Bitcoin, or are you just building something to lure in investors? And I think Michael Saylor has largely proven, certainly, that he understands Bitcoin, he groks Bitcoin, and he's utilizing financial engineering, capital markets to basically offer an orange pill to the world through capital markets and his unique structure that he has as a public company in the United States. Joe, you mentioned that Saylor purchased about 2.5 months of the mining supply that was just announced this week. I've been tracking that as well this year. He's basically bought enough Bitcoin to 3x the mining supply year to date, which is absolutely mind blowing in a bear market. A lot of Bitcoiners are wondering on Twitter, online, that my friends ask me, why is the price of Bitcoin where it's at? Why are we still at 75K if one entity is absorbing so much of that Bitcoin? Do you have thoughts on why Bitcoin's price is still 40%, 35% down from its peak?
It's a really good question. So to put things into context, obviously when Strategy is buying Bitcoin and when anyone's buying Bitcoin, someone else is selling it. So ultimately, when you're buying huge chunks of Bitcoin, obviously the price is going to ratchet up marginally. But in this case, two things going on. Number one, right now, global liquidity is not expanding. So we're in a contraction phase of global liquidity, meaning banks lend less often. There's less money frothing around in the system, or at least the pace of new money frothing around in the system isn't very high. And Bitcoin obviously is this sponge of global liquidity. So when the money printer is revving, when credit conditions are favorable, when new loans are being extended, i.e. new money is being created and printed into existence, Bitcoin tends to respond quite favorably. That said, that hasn't been underway. So even though we have one entity scooping up a huge amount of Bitcoin, on net, the market isn't nearly as bullish as Michael Saylor. The second thing is, of course, we have a war going on. We have the Iran war. We have been there for coming up on 2 months now. Unfortunately, we struck Iran at the end of February, and since then we have been in that war. That said, if you take a look at Bitcoin relative to the S&P 500, for example, over the first 3.5 weeks of the war, Bitcoin was the best performing asset. It's only recently that the S&P 500 and the NASDAQ have finally turned around. But if you take a look basically from the entire first month of the war up until actually a couple of weeks ago, the first 6-7 weeks of the war, Bitcoin was the best performing asset. And it's still doing quite well now, but it kind of tells you something. And what it tells you is that Bitcoin is chaos insurance. So despite Bitcoin not necessarily doing very well, even though we see all these huge strategy purchases, it's still doing very well in the face of the Iran war. Not as well as equities, but that's certainly okay. If you look at the past several crises, the past 7 crises to be exact, Bitcoin, 60 days afterward, including this one, has been the single best performing asset. So you look at the U.S.-Iran escalation in 2020, COVID, Russia invading Ukraine, the banking crisis, the yen carry trade unwind in August of 24, and Liberation Day last April. Bitcoin was up 7 out of 7 times after 60 days. Whereas with the S&P 500 and gold, that wasn't the case. More often than not, gold was down. More often than not, the S&P 500 was up, but only marginally, like 2 or 3%. And so that's sort of where we are. That's basically what's happening here. Over the since the Iran war, since February 28th, Bitcoin is still the best performing asset. Gold is up like 2 or 3%. Bitcoin is up substantially more than that. When the Iran war kicked off, Bitcoin was at $65,000, $63,000. It's at $78,000. So it's the best performing asset since the war started. Over the last month, the S&P 500 and the NASDAQ have overtaken it. But that said, sort of going on to basically what the reason I'm saying this is, like, in the background, despite Bitcoin not having, crazy immediate price pumps when MicroStrategy buys Bitcoin, there are a lot of really great developments that are very material for Bitcoin's long-term strength. The other thing that I'll say is, if you look back through history, Mondays have been the day that Strategy announces they purchased a bunch of Bitcoin. And then they actually go and purchase a bunch of Bitcoin. And so typically these are sell the news events, meaning when Strategy announces a massive Bitcoin purchase, generally speaking, that gets sold into, right? Because it's a logical period of strength for the market. So participants who have been waiting to sell just wait for Monday to dump their bags. So that counteracts any major positive price pressure that would have otherwise occurred. So those, that's primarily the reason, other than the fact that it's a huge Bitcoin purchase, but you also have to understand the macro conditions. But all things considered, Bitcoin is holding up extremely well. The last thing I'll say here, Tyler, is we are in basically a world war, functionally a world war. I pray that this ends sooner than later for the sake of American life. But functionally, we're in a world war, and Bitcoin isn't getting pushed lower. Equities got pushed lower. They got hammered, but Bitcoin didn't get pushed lower. So if we are entering into a massive world war and Bitcoin is steady, then nothing is going to rock this thing. So chances are we have seen the bottom. We're not quite out of the woods yet. We may still see several months of just sideways price action, difficulty breaking above some key levels. But chances are we are out of the woods from a price perspective. And now the question is, when do we break higher from here? It could be some time.
Yeah, well said. I've seen a lot of people speculate online and on X that Bitcoin acts a bit like a prediction market. And so, like, when thinking about the tensions in Iran, as people thought tensions were tamping down and coming to a close, we did see Bitcoin's price kind of, support that idea. Do you think, because of the 24/7 nature of Bitcoin, that's informing some of the price action around global conflict? And then to piggyback on that, to dig into the Iran conflict a little bit more, I'd love to hear your take a little bit about what Iran was doing, accepting Bitcoin payments to allow passes through the Strait of Hormuz. But, before that, what do you think about Bitcoin as like a leading indicator there?
Yeah, I mean, it makes a lot of sense, right? Luke Groman calls Bitcoin the last functioning fire alarm in markets, and it makes quite a bit of sense. If you think about it this way, not only does it trade 24/7, 365, so it's always open, unlike other markets, which are not always open. So there is always hedging activity going on. There is always buying and selling going on. But it's also very large, right? So you have a liquid market in that you can access it 24/7, 365, but it's also large and liquid. It's $1.5, $1.6 trillion in size. So because of that, it's a really good source of information about whether conditions are risk on, whether conditions are risk off, what's happening. And so Bitcoin began moving down before really anything else was moving down. Bitcoin started selling off a full 2.5 months in advance of gold's final blow off top, final rally into that $5,000 price point before falling. So really, Bitcoin is an asset you should be watching as a forward indicator for what's going to happen in the rest of markets. The S&P 500, the NASDAQ, the Russell, everything fell 4 months after Bitcoin started falling. So it is a great leading indicator. And it also works on the other end too, right? When Bitcoin begins rising and breaking through several key levels, it also tends to indicate the beginning of a bear market or the inflection from near-term underperformance to near-term outperformance. So it really is a great indicator that you want to have, even if you're not trading it, about the direction of global markets and whether you should be allocating more to your portfolio, holding off, scaling back, trimming down your holdings, what have you, if you are holding any other assets. And then as far as your second question, the Strait of Hormuz, pretty substantial development, right? If you consider that the United States dollar, a lot of its strength comes from the fact that we use it for global oil trade and global trade generally. Oil prices are denominated globally in dollars. For Iran to begin taking a toll, even though it's an illegal toll denominated in Bitcoin, that's quite a substantial development, right? And I don't think this will unseat US dollar hegemony. In fact, the United States will do anything and everything, including nuking a country to smithereens to make sure that nothing unseats US dollar hegemony. But the very fact that this is the first oil transaction denominated or would be oil transactions, if this is actually occurring, we don't know, denominated in something other than dollars in the last 55 years, more than 55 years, rather 80 years, is incredible, right? So it's a substantial development either way. But one thing I do know for certain is that if they are doing this and they continue doing this, other countries are going to take notice. What I mean by that is, if a country can see they can maneuver around U.S. sanctions using Bitcoin effectively and more effectively than gold, then what's stopping them from doing that, right? If they can see that Iran is able to pull this off without the U.S. being able to stop them, then they might move out of some of their gold reserves and into Bitcoin, right? Think about it this way. Back in 2022, when Russia invaded Ukraine, the United States immediately froze Russia's U.S. Treasury reserves. In my view, that was one of the biggest geopolitical blunders that the United States has ever made, because it drove Russia to begin allocating more to gold and divesting from U.S. Treasuries, which directly weakens the dollar, right? The United States, U.S. dollar's hegemony only goes insofar as, number one, it's used in global trade and commerce, and number two, countries hold U.S. Treasuries to facilitate that, right? To hold in their cash reserves in the meantime as they're trading. So the fact that this happened and they're holding gold now, that's great. They move the hard money, but what happens when they try to transact in that gold? It's slow. It's clunky. Denominating trade in gold is very, very difficult. BRICS, these nations that have been trying to develop a gold-backed currency for years, nothing has come of it. Nothing has come of it. And the reason being, it is extremely difficult to settle high volume and high frequency transactions in a physical asset. It's extremely difficult to do. And so what these countries will invariably find is that Bitcoin performs the function of being a hard money that's not seizable infinitely better than gold when we're talking about global trade. Okay. So chances are what's happening in Iran is a case study. It's a trial balloon, if you will, that a lot of other countries are watching for what will inevitably be, in my mind, a much larger trend of countries beginning to use Bitcoin for international transactions and trade over gold. So it's very substantial. From a price perspective, it's also quite substantial. I mean, if we can get back up to pre-war capacity moving through the strait and the U.S. allows this toll to persist, you'd be seeing like 230 to 300 BTC per day in net new demand from the state of Iran, charging this toll on $1 per barrel, 20 million barrels or something like that every single day going through the strait. So it is quite substantial. But it remains to be seen as to whether or not this will actually occur. And if it does, buckle up, because, it would be another major, major catalyst for BTC, sovereign adoption of BTC.
Yeah, it would be. And, I think Bitcoiners just intuitively get that BRICS is missing the boat by not adopting, the world's best digital money for trade, especially when these countries can't quite trust each other. And like you said, physically settling, a currency is really difficult. So we kind of get how that would be a way to settle these transactions, Joe. But what's the game theory for the United States in that situation? Say Iran, say China do start to realize that Bitcoin is just like a superior way to transfer value. And as you stated, the U.S. doesn't want to give up that global hegemony of the dollar because of the power, behind it. What is the game theory for the United States in a situation where people move into Bitcoin?
It's a great question. Well, I mean, if you are currently the world's reserve currency and countries around the world are showcasing that they are able to successfully maneuver around your sanctions using Bitcoin, and they're effectively able to denominate trade in Bitcoin rather than using dollars, they're fully circumventing you. Well, if I was in that position, then I would want to accumulate as much Bitcoin as possible to make it extremely expensive for those countries to do so. I would want to accumulate 1 million, 2 million, 3 million, 5 million BTC at the sovereign level to make sure that, okay, if these countries are going to denominate their trade in Bitcoin, I'm going to be the largest sovereign holder of Bitcoin. right? That's what I would do. And so from a game theory perspective, the way that this plays out, if and when this does occur, because if Iran isn't the first state that's going to denominate trade in Bitcoin, it's going to be some other country, because they're witnessing the fact that holding US Treasuries gives you a negative real return, even though it's extremely convenient for near-term cash when you're doing global trade, a lot of high-frequency global trade. It's very inefficient for long-term holdings. And so I tend to think that it's going to start with sovereign nations owning a Bitcoin reserve. It's going to move into actually other way around, excuse me. It's going to start with sovereign nations denominating transactions in Bitcoin and then building a Bitcoin reserve, however big, however small, as a result of that. And then an increasing percentage of their trade, of their GDP, being denominated in BTC, those transactions being denominated in BTC. And slowly but surely, the US sees that, oh my gosh, my percentage of foreign exchange transactions that take place in the dollar is going down. I'm going to buy Bitcoin. There's nothing I can do about this. I can't go to war with China and Russia and Iran and India and wherever else at the same time. I'm going to feverishly buy Bitcoin at the fastest pace that I possibly can. This is a national security threat. So that's sort of how I see it playing out. And the reason I do is, like, number one, inflation has reached such a level that holding US Treasuries becomes completely undesirable for very long periods of time. And so you need a hard money, but amongst the hard monies, Bitcoin is the only one that functions in a digital economy, in a very high frequency global trade economy. In my view, I view it as an inevitability. And from the United States perspective, it's really just an arms race to see how fast they can accumulate Bitcoin before other nations to have some hope of preserving US dollar hegemony.
Yeah, it makes a lot of sense, and that path to get there is always a little bit clouded, Joe. But I think you nailed it on the head. And the inevitability aspect is like certainly on the forefront of all of our minds, and exciting to see how that unfolds. Moving back, when you think about Stretch, MicroStrategy's product that's offering a high yield, of course there is a variable dividend on that. I think there might be a little bit of a last gasp by the as foreign demand for U.S. Treasuries tamps down, for banks to jump on the Treasury trade even more, to lever up their balance sheets and kind of through the Federal Reserve System fund those bonds that the U.S. Treasury puts out. Do you think banks are going to see the yield that Saylor's paying on a Bitcoin-backed product through his digital equity, and they're going to attack Saylor for being able to offer such a high yield product while they've got treasuries that might be paying out 3, 4, 5%?
No, I don't think so. They're totally different worlds, right? One is a private company, or excuse me, public company in the United States that's offering what is effectively a corporate bond. It's not, right? The rights are different. That carries 11.5%. It comes with a whole host of risks, right? Obviously, balance sheet risk, corporate risk, any risk of holding a public company's instrument over what is proverbially a risk-free instrument. Obviously, it's not risk-free. It carries the risk of the United States defaulting. That's never happened. If it did happen, that would destroy the US dollar forever. And so that's really not a risk. The other risk being the massive sell-off in treasuries, or yields spiking massively on treasuries, which devalues your own US Treasury. So like the risks are slim to none with US Treasuries. And so they're really in two different worlds in my mind. What I do think Stretch is threatening is banks, specifically high yield checking accounts, high yield savings accounts. Saylor has gone and met with Morgan Stanley. He took a picture with Fong Li at their headquarters. Chances are he's also met with Goldman Sachs and a lot of the other major Wall Street banks. And guess what Goldman Sachs just launched? They launched a premium income Bitcoin ETF. So they are trying to tap into a little bit of that market that's looking for some sort of income using Bitcoin as collateral. Obviously, it's a little bit different. It's closer to something like MSTY. They're selling covered calls. So you're getting the Bitcoin upside, but you're also getting fixed payments, not fixed payments, but you're getting payments on it. So it's targeting a slightly more adjacent market to what Stretch is offering. But either way, this is Morgan Stanley dipping their toe in the water to see if Bitcoin-backed fixed income is something that they'd like to dabble with, right? Just the mere reality that a public company, not a U.S. bank, can offer superior yields to everything that's on offer at all major U.S. banks. If I was a forward-thinking person working at one of these financial institutions, I would want to be exploring the possibility of creating our own version of this as well. And so that's how I see this playing out. I don't see this threatening the US dollar or creating massive capital flight from US Treasuries, because they're two entirely different products with two entirely different risk profiles. What I do view Stretch as challenging, though, are the deposit bases of every major bank in the United States. And so that's why that's why I believe Morgan Stanley is dipping their toe in the water here. And I think this is just one instance of hundreds of other products that will be launched by banks over the next 5, 10, 20 years in order to mitigate that flight. I'm not saying that Stretch is like a bank account. I'm not saying that it is like a money market fund. What I am saying is that the yield is very enticing and the collateral is strong enough that it does threaten at the margin to potentially draw 1% of depositors away, 2% of depositors away. We're still in the very early innings of this, so we'll have to wait and see. But I think the one trend is clear, and that's that banks are creating Bitcoin products, and now they're creating income-focused Bitcoin products to tap into the same cohort of investors that Stretch is tapping into very successfully.
If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin treasury, there's a Coldcard for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The dip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market-leading rates at every size. You can learn more at archlending.com.
Yeah, we're seeing a lot more of these bankers show up at, Bitcoin events, and like you said, they're rolling out products, dipping their toe into the water. It's certainly, seeing the demand that's coming into Strategy's products, and I'm sure they're hearing it from some of Morgan Stanley's hearing it from their clients. Is there's some demand internally for this product? Do you think they're starting to get it? And what does the world look like where bankers from the legacy system start to understand Bitcoin more? Are these products a good orange pill for bankers and for the people building them?
In my view, it is, right? Like for a banker, fixed income is their entire world. And so it's much easier to understand something like STRC, particularly with the fact that GAAP accounting rules in the United States have changed, than something like Bitcoin, right? If you think of bankers and gold, that relationship hasn't necessarily been very strong since 1971. It's been 55 years. But what they do understand is credit. They do understand fixed income. And so Strategy is sort of speaking the language of the banks with Stretch. And so to me, this is a very effective way at orange pilling, not just bankers, but also anybody who's familiar with fixed income generally. It's going to take some time. It's going to be one individual at a time. But very, very clearly, if there ever was an orange pilling tool for financial institutions, it's the one that offers, a fixed monthly dividend for sure.
Yeah, absolutely. Where do you view this current cycle of Bitcoin? Is this the Wall Street cycle, so to speak? We've seen. I was looking at your pinned tweet earlier today, where you said last year Bitcoin's $100 trillion idea, currently valued at $2 trillion at the time you made the tweet. Like you said, we're sitting at about $1.5 trillion today. We've seen Bitcoin's dominance compared to other, crypto assets slowly rising this cycle. Famously after the ICO craze in 2017. You said there's Bitcoin and then there's everything else. So as we move into the next epoch, the next halving that's coming up in 2028, there's going to be more of a supply shock, and we'll we'll probably be talking about some pretty crazy numbers with how Bitcoin treasuries and specifically strategy are absorbing those Bitcoins that are being mined. But how do you see this next kind of cycle and epoch playing out, Joe?
It's a really good question. And I could take this a lot of different directions. I think that the institutions are here and they're here to stay. You could say this is the Wall Street cycle, but ultimately, I think that this is the cycle where Wall Street dips their toe in the water. The next cycle, and just the next several years more broadly, will be the cycle where they really attempt to build these products at an accelerating rate, right? Stretch is sort of the first instance where any company is attempting to transmute Bitcoin's high growth properties into a fixed income instrument that appeals to a much wider base of people. But we're already seeing the groundwork being laid for banks to begin allowing clients to buy Bitcoin directly. Charles Schwab just launched spot Bitcoin trading internally. They're going to launch it to all of their clients over the coming weeks. This is a multi-billion-dollar global financial institution with a lot of accounts in the United States. So this is them in a very real way dipping their toe in the water to see what the demand is like from their clients in order to buy Bitcoin on their platform. Once they see that it's large and large enough, chances are they're going to be launching other products alongside it as well. It won't just be the ETF issuers or platforms that offer ETFs and financial products. It'll be Chase Bank, right? Chase Bank has also discussed allowing clients to purchase Bitcoin and gold in their accounts and hold it directly alongside their cash. Clearly, there is demand for this. And so I view this as the cycle where there's a lot of experimentation among the firms at Wall Street, the banks, the investment banks, the ETF issuers, what have you. And the next 4 years, the next 6 years into not just the 2028 halving, but the 2032 halving are going to be where things really kick off in earnest, right? You're beginning to see a fee war now. You're beginning to see these institutions dabble in brand new products that allow for spot Bitcoin access. The next level after that are fixed income products, not just STRC, fixed income products inspired by STRC that are based entirely in Bitcoin. And that will unlock, and imagine having an STRC like income product at Chase Bank, at Citizens Bank, at Bank of America, what have you. And so you extrapolate this out, we have one instrument targeting the fixed income sector. It's available on a lot of brokers and trading platforms. But what happens when you have hundreds of those instruments available at most bank accounts across the country? So really, we're just scratching the surface right now with Bitcoin's integration to fixed income. And I believe that over the next 6 years, you're going to see that accelerate even further. And most people are going to be holding Bitcoin in the United States. They're just not going to have any idea.
Yeah, totally. I'd love to get your take if you've got something you've been thinking about with the threat of quantum computing to older Bitcoin wallets and the protocol generally. Of course, nodes have to implement and upgrade around cryptography to stay with the times to make sure Bitcoin is upgradable. Do you see because there is such a concentrated amount of Bitcoin resting with strategy, resting with BlackRock through their ETF, and there's going to be some more competition in that space. Obviously, the economic nodes in Bitcoin do have a lot of sway because at the end of the day, they're the ones who can choose to buy or sell. If there was ever a hard fork in Bitcoin, how do you think about the quantum threat? Do you think it's been overhyped, underhyped recently? And how should Bitcoiners who are maybe just on the sidelines, looking at this discussion right now, think about this show?
It's a great question. I mean, the phrase that I keep parroting is preparation, not panic. This is not something to panic about. This is not something to sell the asset over. In fact, if it was an existential enough risk to sell the asset over, Bitcoin would be trading much lower than it is right now. It would be in the 40s and the 30s. But I would say that because there is such a large number of Bitcoin that are quantum vulnerable and have been dormant for a very long time, and also right now a great deal of addresses simply haven't upgraded or migrated, and even the Bitcoin protocol in and of itself right now has no quantum resistance. Not to mention the addresses that have been dormant and are just sitting there for the taking. Two things need to be done. Number one, we need to upgrade the Bitcoin protocol so that the lion's share of Bitcoin right now has quantum resistant signatures. And number two, we need to make it so that dormant addresses are no longer quantum vulnerable. And that can be done in a number of ways. Number one, recycling them, not recycling them rather. The only way that you can really prevent those Bitcoin from being hacked into and then sold onto the open market are for you to burn those coins or go in and make the addresses no longer accessible, what have you. I tend to think that what's going to happen is we are going to upgrade Bitcoin to be quantum resistant. We're going to have quantum resistant signatures. It's going to be very efficient, but we're not going to do anything about Satoshi's coins or any other dormant coins. Reason being, I think that the threat of freezing Satoshi's coins and the market seeing, whoa, like coins can be frozen, is higher and worse for Bitcoin in the long run than just allowing them to be hacked and allowing them to be sold. Now, that sounds crazy. That sounds terrible, but that's until you realize Satoshi has about 1 million BTC. The amount of Bitcoin that generally gets sold within 6 months to 9 months is well over 1 million BTC. So it would get absorbed by the market. It would be very painful, but it would be near-term pain compared to the long-term pain of any Bitcoin holder, institutions included, knowing, oh my gosh, if consensus allows for it, my Bitcoin can be frozen. My Bitcoin can be deemed unspendable, right? So I believe that we will upgrade to quantum resistant signatures, but we'll leave Satoshi and other dormant old addresses alone. That said, assessing and weighing the risk of this, Google says that we're less than 5 years away. A lot of other quantum advocates say that we are within a decade. And so I think this is a threat that needs to be addressed now, but thankfully the Bitcoin core devs are working on it. There are a boatload of proposals that are being put forward, and thankfully there is good work being done in a number of different ways in order to create quantum resistant BIPs for BTC, which I'm very happy about. So there is work being done. Chances are quantum is going to be an imminent issue to Bitcoin within the next number of years. And so we should be preparing for it, but not panicking about it.
Yeah.
Which we already are.
Well said.
So.
Yeah. It's tough. That discussion is going to reach a fever pitch at some point. And I am sympathetic to the view of potentially not making the theft of those coins accessible, but that requires a long runway. I think I'm kind of with Adam back, is that I think we need to provide the longest runway possible of having quantum resistant options and the ability for people to move their coins, Joe.
Fully agreed.
It'll be really interesting to monitor that. So I'd love to talk about what you're doing at Horizon, and can you tell our audience about the home equity play and the unique opportunity that you guys are allowing people to package their home equity into Bitcoin?
Of course. So home equity is a $37 trillion market in the United States, and chances are it's the largest asset that you have on your balance sheet as a homeowner in the United States. But it's not doing much for you. So after inflation, it's doing maybe -2%, maybe -3%. On paper, it looks great, right? Depending on the market, you're rising anywhere from 2 to 4% annually until you realize that actual monetary expansion is running at 5%, 7%, 8%, 10% a year. So you realize that in real terms, you're losing money on your largest asset every year. And so it's a very big problem at the individual level, and it's not one that most people recognize. So what Horizon exists to do is help homeowners convert their idle home equity into Bitcoin without monthly payments, without interest charges or term limits. So effectively, the way that we do this is, instead of a traditional loan structure where individuals are borrowing against their home's equity, there's interest accruing onto your principal balance, and you have monthly payments, and chances are you'll have a fixed term limit, right? Whether it's a HELOC with a 10-year term, a HELOC loan over 5 years, a mortgage over 15 or 30 years, there's always a term of some kind. And that also always comes with prepayment penalties. If you decide you want to pay off your HELOC loan a year early, you might get hit with a 100 basis point, 150 basis point penalty. If you decide, depending on who your mortgage is being serviced by, to pay off your mortgage a decade early, 2 decades early, you might get hit with some kind of penalty. That's not the case with Horizon. So the way that we've done this is, instead of a loan, what you're doing to us is you're selling us a share in your home's value. That share grows marginally over time to an upper limit, which is reached at year 7. In exchange, you are receiving tax-free BTC. So we don't have any claim on the Bitcoin. It's entirely yours to keep and do with as you please, and it doesn't count as taxable income in the year that you receive it, and then you hold it. And that's it. So effectively, imagine taking a chunk of your home, up to 22.2% of your home's net equity, and converting it into Bitcoin. It'd be like, let's say you are in a standard 2-story colonial. It would be like taking the kitchen and the living room out, selling just those and converting them into Bitcoin. That's effectively what it is. So you're converting some of your equity that's not doing anything for you into Bitcoin, which historically has a multi-year compound annual growth rate in excess of 30%. So you're swapping equity that would have otherwise earned you 3% into equity that's earning you 30% plus. And we do this in such a way where, because we have no monthly payments or interest charges, it's not encumbering your income. So whether it's because you can't make monthly payments or whether it's because you can, but you just don't want to, and you're already using that extra capital to buy Bitcoin anyway, whatever it might be, we are allowing you to convert your underperforming equity into something that will grow and work harder for you, Bitcoin, without any claim on it, without any monthly payments, without disrupting your lifestyle. And so far, right now, we're available in 21 U.S. states, 22 U.S. states, including Washington, D.C., California, Florida, and others. And it's gone gangbusters so far. We have helped hundreds of homeowners at this point convert their idle equity to Bitcoin, and it's a seamless process. We've done it in as little as 2 weeks. Typically takes about 3 to 4 weeks, and it's fantastic. The reviews we have received so far have been great, and it's an excellent company to be building in. It's an excellent space to be in, the intersection of Bitcoin and real estate, because ultimately this is one of the largest dormant pools of capital sitting there mostly untapped into Bitcoin. Currently, the only solutions are you could sell your house to buy Bitcoin. It's not ideal because you need somewhere to live. You could take on a mortgage in order to buy Bitcoin or a HELOC, but you get the monthly payments. You have interest rate risk if you're talking about a HELOC. You could sell all of your rental properties to buy Bitcoin, but that's not ideal. You're losing your cash flow. With Horizon, we allow you to have the best of both worlds. We allow your house to be a home and let Bitcoin do the rest. So that's essentially the high-level overview of what we're all about. The aim is to be in all 50 states. The aim is to help thousands, tens of thousands of homeowners do this process and ultimately make it so that homes are no longer financial assets. They are simply places to live. And Bitcoin can be the financial asset holding all of that excess liquidity that homes were never designed to be.
That's really cool stuff, and I love the vector you guys have taken on that. It's really unique way to transmute that debt equity, like you kind of said. This would have been an amazing product also in 2017, but I think people are going to be looking back in 10 years and be like, wow, putting this equity to work really changed my life. So why why are products like this going to keep popping up, Joe? Is there going to be a whole new category of taking the monetary premium out of all these assets that have accrued value over time? I think we're scratching the surface of how this could apply to fixed income, how it could apply to equities, gold. With fiat debasement, I'd say accelerating over the certainly the zoomed out time frame. How does more and more of this capital that's been ascribed a monetary premium flow into Bitcoin?
For sure. It's a really great question. Well, I mean, it's inevitable in my mind for a couple of reasons. Number one, as the debasement accelerates here in the United States, money is going to look for a home. It's going to look for a home. And it's been the case over the last 55 years since we depegged from gold in 1971. We're almost coming up on the 55-year anniversary here in 4 months, I think. Ultimately, you've seen this accelerate, but it's accelerating year after year. When we depegged from gold, a home was about 2.5 years worth of salary, right? The median home price was 2.5 years worth of the median salary. That was it. Right? A dishwasher in Laguna Beach, California could buy a home after a couple of years of working in cash if you wanted to. These days, if you're a dishwasher, you have to work 17 years, 20 years to afford a home, something like that. The median salary buys a median home in 8 years. So ultimately, what happened was once we depegged from gold, capital flowed from US dollars into what was relatively scarce. So we're talking commodities, gold, silver, mostly gold. We're talking other hard assets like real estate. Real estate is relatively scarce. It's not absolutely scarce because you could build more homes. You could demolish the home and build a new one. Land is scarce, but real estate is relatively scarce. You can always build more of it. And also, here in the United States, we're still building new neighborhoods and new construction 250 years later. right? So it's not as if there's any shortage of homes. It's not as if there's any shortage of land to build homes on. Homes are relatively scarce, and so they have appreciated as a result of that. However, if you track monetary expansion, they haven't appreciated one-to-one. They have underperformed monetary expansion. So ultimately, the reason that capital will flow into Bitcoin is because that's the trend that's already happened for the last 55 years. Capital just finds its way into assets that are relatively or absolutely scarce. The difference is with Bitcoin, Bitcoin is the only absolutely scarce monetary asset we have ever had in the history of the planet. So that's why this trend is going to happen. Capital is going to move out of where it's treated poorly and into where it's treated better. It will flow out of gold into Bitcoin. It will flow out of real estate into Bitcoin. Bitcoin has grown 14x relative to global real estate over the last 6 years. 14x. So obviously, real estate is going to continue growing as a market. Of course it will. Gold will continue increasing in value as a market. Of course it will. But Bitcoin is going to increase as a market faster than both of those and make up a larger percentage of each of those markets as time goes on until it overtakes gold, until it overtakes real estate. So in my tweet that you referenced 15, 20 minutes ago at the top of the show, where I said Bitcoin is a $2 trillion $100 trillion idea currently valued at $2 trillion. Ultimately, what that is calling for is 10% of the total global asset value being poured into Bitcoin. And ultimately, that's not that crazy of a thing to ask for or a thing to call, right? Right now, gold is worth 3.4% of total global asset value at $34 trillion, roughly speaking. And so ultimately, I could see gold heading to 5%, heading to 10%, heading to 12%. But ultimately, because Bitcoin is a superior monetary asset, it's going to reach those milestones too. And I believe it's going to reach them faster. Eventually, we're going to reach gold parity. The question is, what will total global wealth be at that point in time? Will it be 1.5 quadrillion? Will it be 2 quadrillion, 5 quadrillion? It's an inevitability. It's not a matter of, in my mind, if, it's a matter of when, right? For the exact dynamic I just mentioned earlier. Good money always siphons capital away from bad. Good stores of value always siphon value away from inferior stores of value. And so you're already seeing it with really poor stores of value getting sucked into Bitcoin. And over the next 5, 10, 20, 30 years, you're just going to increasingly see it with relatively good stores of value being siphoned into better stores of value, the apex predator of this market, and that is Bitcoin. And so you're not going to see a full demonetization of gold or a full demonetization of real estate, but you are going to see a partial demonetization relative to BTC.
Awesome stuff, Joe. I think that's a really optimistic and hopeful place to leave us. Tell our viewers where they can follow you online and learn more about your company.
Well, Tyler, thanks so much for having me, man. This was an absolute blast, and I hope to be on again at some point in the future. If you guys want to find more of my work, you could just type in the search bar up there if you're on YouTube, Joe Consorti. You can find all of my long-form videos. And if you want to see what I'm working on a day-to-day basis, just go to joeconsorti.com. You'll be able to find all of my information there, links to my X account, links to my YouTube channel, and some other content as well. Tyler, thanks again for having me, man. I appreciate it.
You got it, man. And one thing I have all my guests say before they leave is stay orange.
Stay orange.
Love it. Ladies and gentlemen, the man building the bridge between your home equity and hard money from Horizon, Joe Consorti.